There's so many different credit repair, and you'll see people on Facebook just post like, hey, I can help you with your credit, but how legitimate are they?
You have to know like the guidelines and the straight to the point and the law.
We're in the process of like getting them ready to buy their home in the summer. Her credit dropped over 120 points on one late payment. She's at 530.
That's accurate.
What?
Yeah.
Yes.
And it's just like, whoa, what happened? So, all right, welcome to another edition of Millionaire Moves with Mike Mendiola. Today, it's something I want to talk about that I'm excited about. It is credit repair, how to fix your credit and get home ownership. So I want to introduce Anneth Peña, and we have Vanessa Mendiola. Last name sounds a little familiar. So, but Anneth, so how long have you been in credit repair? What drove you to want to be in credit repair? And give us a little bit about your backstory.
Okay. Well, my name is Annette and I'm a credit repair specialist. I've been in business for a year and 2 months. I've made credit repair. I made it this my mission because a lot of misunderstandings throughout. This is not something we kind of grow up and learning these things, and most things that I come across is, credit, overall. A lot of mistakes throughout that, people do because it's misunderstood. It's crazy.
Yeah.
Whenever I got into the business, I'm like, oh my God, this is crazy. The amount of people that are just stuck in one position, but they just don't know where to go. They don't know where to transition.
You hit on something really big there, right? Especially with us being Hispanic,
Yes.
right? It's not something that is taught in the home from an early age, right? Especially about finances, about how important credit is to your financial future.
Absolutely.
So like to bring that up immediately is huge, right? It's one of those things that if we can get a hold of the younger generation and explain to them, credit is everything, saving money is everything, investing money into your future is everything. It's not about the look of wanting to have the look out there. It's about what you're going to be doing 30, 40 years down the road.
Absolutely.
Right. So before we get into all the different tactics and things of that nature, your credit score, like what is some of the credit challenges that you see from most people as when they come to you?
Yes. Challenges, I get all kinds of people. Sometimes people are like, hey, my score is this amount. Okay, I get into the system and I do an audit. And sometimes it's not even negative items or late payments. It's just credit card, debt. The number one thing here in the United States, it's debt. So the more debt you have, the less points the credit bureaus start knocking you out. And that is something very important. I've had clients where they come thinking, oh, I have something negative, but it's not even that. It's the credit cards. So credit utilization, I always tell them, keep it 20-30% below the credit limit. Right. If you exceed, credit bureaus are going to start noticing, and they're going to take that to their advantage and start dropping the points. And it's something that I didn't know until I got into the field, and I right away started doing the same thing.
So it starts dropping your credit score?
Yes.
Oh. So once you go under 30% or above 30% of your credit card utilization, it brings the score down, right?
Yes,
right.
It does. And because they think that, okay, well, their limit is, let's say 2,000. 2,000 from 30%, it's 600. So if they even see that your balance is at 650,
that's enough to bring it down.
That's enough to bring it down. And,
and then for you, like when you're dealing with, on the real estate side and you have people that contact you from Facebook and they say, hey, I have some credit challenges, what information do you give to them, or do you send them directly to credit repair? Do you send them to a lender?
Well, the first thing is there's a lot of hesitation with credit repair companies. And that's what I want to get into a little bit about what you do differently, because some of the credit repair companies have kind of developed a bad reputation that they just will run credit and have people dispute charges, and that doesn't help. You can't have a loan with disputes on your credit report.
Right.
So, but that's usually what people who have come to me that are already in credit repair, that's their main thing. Like, well, I'm doing credit repair and they're telling me to dispute this and dispute that. And you can't. Will a loan get approved with disputes?
No, I get that all the time, right? Yeah. Somebody's like, well, I'm working in credit repair, and then I'll pull their credit and they'll have like 7 disputes.
Right.
And the problem that we have on our side is like those disputes are holding a credit score.
Yeah.
As soon as those disputes come off, the credit has a chance of dropping another 30 to 50 points
Correct.
because it's holding that credit score there, right? It's not keeping it from going up. It's not keeping it from going down. It's keeping the negative or the positive away, right? As soon as we release those, we don't know which way the credit's going to go. So if you come to me and you're like, I'm at a 580, I can buy a home. Not necessarily, because as soon as we take these disputes off, you could go to 620 or you could go down to 520, right? Sure. And that's the danger. So it's like, if you are in credit repair, like get with somebody that can guide you the correct way, you know?
Yeah. So when someone comes to me and like they're like, hey, I want to buy a home, but I'm already in credit repair, because I do have a background in lending and I've been a loan officer and process loans, like I know a little bit about the process to what I'm looking for. I know if they tell me like I'm in the low 500s, because that's what Credit Karma told me, like I already know it's really like probably 80 points lower than that. So that's for sure when I try to get them to a trusted credit repair specialist, because there's certain things that I don't know that you will know.
Correct.
Right? So how are you different from other credit repair companies?
Transparency.
Yeah.
I deal with referrals and from out of the states, you know, and one of the main things is clients feel very skeptical getting with just a credit repair company or a person. And so I like to be very upfront and honest with them, because I think that that's something very important. And I like to build trust within the client. But that is the number one thing. Yeah. They're very skeptical. And the thing is that I'm very
Do you have to be certified to be a credit repair specialist?
No. So, it's a yes or no. You can do it yourself. But when you get a credit repair specialist certified, we're of course in classes and updated FCRA laws. You have to follow protocol. And there's guidelines, there's documentation, proper documentation, and you know that is very important as well. Anybody can do it themselves, but you know there are FCRA laws that you must follow so it can.
Yeah.
Interesting. Yes. I did not know that.
Yeah, because and that's the thing. It's like there's so many different credit repair, and you'll see people on Facebook just post like, "Hey, I can help you with your credit," but how legitimate are they, right? And that's the big thing. Is like, so when it comes to legitimate, and how long you've been doing this, you know, what steps did you take to make sure that whenever you have a client, that they feel safe and trusted by you?
Content is the number one thing here, because they want to see business and they also want to see personal. So I try to have like a combine with both. And just like I post, every day my schedule is I have to post at least something, either something educational, something funny, something family wise, something where the page is running, where the page is going and the client feels comfortable. One of the number one things, the client is very scared, you know, they don't know you. They're just looking at you through videos, but once you schedule them in a Zoom, in a call, they feel more confident. Yeah. And the thing is that I've had clients that come from other companies and they just take their money and buy. We don't provide you updates. We don't talk to the client. They respond a month later, and I understand them, and I'm very flexible. If they're not able to right there and then, I try to work something out with them, but I always make it work for them, and that's what they keep on referring me more business because I'm very transparent, and I tell them, look, you know, it is a process. It's not something overnight, but consistency is key, and as long as you do your 50, I do my 50, and because here's the thing, a lot of clients think that credit repair is within a month and you're good, and it can take anywhere from 3 to 6 months. It can take less than that. It can take more than that. You know, each file is different, and I like to be very upfront with them since the very get-go, and I don't like guaranteeing anything because anything could happen within that transition. And that's, you know, that's how it.
And that's a question for both of you guys, right? There's different scoring models out there, and that creates a lot of confusion. Lots of confusion, because on the mortgage side, we use FICO, right? That's the model that we use. But there's different models to the FICO, right? Like typically we'll use a model FICO 8, a FICO 10. There's FICO 4. And one of the things I always have to explain to borrowers is you're looking at your it could be a Vantage score 3.0 that is for your car, and it's saying that you might be at a 680, and then you don't understand when I pull credit. We're using FICO score 8. That is the risk factor completely changes, and that's why your score could be a 620. So I think that's one of the big keys. Like whenever you're understanding your credit, you're looking at Credit Karma, Credit Wise, and those that nature. There is another one out there called FICO. Look at that one. That's going to get you a little bit closer to what we look at on the mortgage side. But as a realtor, do you get those questions where they're like, I don't know what score is what? I don't understand. All I know is it says I have this.
Yes, I get everybody that pulls out their Credit Karma app and says, Credit Karma says I'm at a 620.
Mm-hmm.
And I'm like, but Credit Karma is for consumer use, for cars, for credit cards, not for mortgages. Like that's where the difference is. And what is the one website that they can use that's the FICO one? What is that one?
Yeah, I think it's just FICO.
I think it's My Smart FICO.
Is it? It might be something like that.
Yeah,
My
you need to look
FICO.
it up, and that'll give you the most accurate one.
MyFICO.com or something like that.
Yeah, that's closer to the mortgage model.
So let me ask you this: say that they pulled out their phone and they're like, "Hey, I have a 620. You send them to me to pull credit," and I'm like, "They're at a 550." And then they come back to you and they're like, "That lender's dumb. He said I'm at a 550. I know I'm at a 620, right?" Like,
well, the first thing I would just educate them and let them know that's not the proper credit score a lender's going to be looking at.
Yeah.
Like, and I know this already from my lending background. Like,
but other people in real estate, is that like common knowledge? Is that something that maybe that if it's not common knowledge, how do we get that information out there?
I don't think it's common knowledge. I think there's a lot of realtors who trust Credit Karma and think Credit Karma is correct, and they'll, not knowing, let the buyer know, oh, you should be good. Let me send you to your lender, to my lender, my preferred lender. And then they'll get mad at you.
Yeah, they do get mad at me. Yeah, I get those conversations.
What do you mean?
They're like, no, something's wrong. In fact, I have a buyer right now, great person, right? And we've been working with her for a good 6 months. But her credit was pretty decent, 680. They had a late payment that they were unaware of that hit in December. We're in the process of like getting them ready to buy their home in the summer. The credit, and I have to ask you this, her credit dropped over 120 points on one late payment. She's at 530.
That's accurate.
What?
Yeah.
Yes.
And it's just like, whoa, what happened? So we have estimators on our side that we can kind of gauge things and see if there's a way to help. And so my first thing to her was like, I'm like, get on the phone, see if they can remove that late payment, because we got a lot of work to do now. Right. So when you get a client like that, how do you direct them? Where do you start?
As far as the late payments or everything overall?
Just like they come to you, it's like, I'm buying a house this summer. We were set up. I had this one late payment. I don't know what to do. I'm freaking out.
Late payments, a late payment is worse than having a collection account.
Really?
Wow.
Yes. And it knocks out automatically 120, 120, 130.
Wow.
I've seen 200.
Wow.
Does it matter like what the trade line is?
It doesn't matter.
It's just a late payment.
Late payment.
And how long does it take for that late payment to like where it doesn't affect your credit so much?
After 2 years.
2 years. So you're on the hook for 2 years.
After
you make a
2 years.
mistake, willingly or unwillingly, it's a 2-year sentence?
Yes.
Wow.
Wow, that's huge. So you're saying a missed payment can be worse than a collection?
Absolutely.
Wow.
It's crazy.
Mm-hmm.
And when with late payments, it is a 50-50 chance.
Mm-hmm.
I always tell my clients 50% of the time it can be removed by the credit bureaus and 50% of the time it cannot.
Yeah.
Now, as I work through your file, my work does get aggressive, but I have to be very upfront. It is not 100% guaranteed. So at this point on, if you are wanting credit repair, just make sure that everything's paid on time, auto pay, whatever the case is, just try not to hit those late payments, because it puts me behind, and it's not gonna work.
So do you contact the companies directly from their credit report and try to figure stuff out, or how do you fix their credit?
Without giving away the secret sauce.
Don't give away the secret sauce, but like just kind of
Yes.
give us a little idea of like how you personally like handle the
Yes.
repairs.
So we have a software. A credit
Mhm.
repair specialist has a software. It's either Credit Repair Cloud or a Dispute Box,
Oh.
where you integrate all the clients' information into the system, including their credit link, the credit monitor.
Mm-hmm.
For us, we use Vantage.
Mm-hmm.
We don't use FICO. We cannot. It's just a different module, like you mentioned. Once we put the person's information into the system, it just automatically just pulls up everything,
Gotcha. Mm-hmm.
all the debt, when it started, when it hit to collections, and it comes across Experian, TransUnion, and Equifax.
Yeah.
Oh, so you get all three.
So we have to have a certain law to go to match what it is, and either update it, remove it, or whatever we want to do with that account.
Yeah, because everybody just comes out and they're like, oh, I'm just going to dispute it and I can do it on my own, right?
Yes.
Yeah.
And it's just like, well,
And send documentation.
right? Because I mean, obviously there's a way to do it to be effective with it.
Yes,
right?
Absolutely. And I had my boss come up to me that he was trying to dispute a late payment, and whenever he showed me the dispute, it just said, dear TransUnion, I do apologize. I had emergency. That's not gonna work.
They don't care.
They don't care if you had an emergency
Right.
or you lost your job. They don't care.
Yeah.
You have to know like the guidelines and the straight to the point and
Mm-hmm.
the law that is gonna.
So, so on late payments, when you have that,
Yes.
do you have more success with because you'll see, at least that I see,
Yes.
right? Portfolio recovery. I'll see Chase, Wells Fargo. I know from my experience over the years of working and just seeing things on the back end, it seems like companies like Portfolio Recovery or those collection agencies, you have a little bit more luck with them than maybe somebody like a big bank.
Yes and no. Sometimes I do, and sometimes I don't, and it just depends on the debt as
Yeah.
well. And but they can be a little bit, challenging as
Yeah.
well.
Yeah.
So I let, especially looking at the debt, I tell the client, hey, it's gonna take some time, but we're working on it. And the great thing about it that when I'm in the system, it sends the client an email that I'm challenging this account. So it's not like they can come to you and be like, hey, like, you didn't work on my stuff, or what's going on, or you know what I mean?
Yeah.
So it gives them that email, like that
The
I'm in
update,
there
yeah. Mm-hmm.
and I'm working on it, whatever the case is. But it is very,
Very difficult.
challenging.
Well, and the other thing that I don't think people are aware of, whenever I pull credit and we're trying to get you ready for a home, that we're looking at all three scores, right? The highest score you have, we throw out.
Mm-hmm.
The lowest score you have, we throw out. We take the one in the middle, right? So say you're at a 650, then you're at a 600, and then your middle one is 630. I'm not taking the 650, I'm taking the 630. The 600, that one's gone too, right? But 630 is what we're going to be working with. So just because maybe your 600 says it's going to go up 20 points, that really doesn't help you, because we're still taking that 630. So I don't think a lot of people are aware of that and I have those conversations. And I think maybe just the education of getting that information out there, getting that information to realtors so they can have those conversations. Obviously you're aware of that, dealing with your clients, but it's, when you are doing credit repair, it's got to be strategic, right?
Yes.
You have to be very strategized on how you're going to do it. One of the things that I'll tell people is like, it's not as simple as just paying off a debt, right? Because sometimes you need to do you can pay it off, or you can pay less and then they accept it, but you want them to do a pay for delete. Mm-hmm. That deletes that negative credit score or that negative credit trade line, because you paid it off and now it shows paid as agreed instead of paid derogatory, right? Because that's not going to really move the needle that much, right?
And yes, and the thing is that they can pay to delete, but most cases these people tell the consumer that so they can pay it.
Yeah.
And they won't remove it.
So that's
Oh, man.
wow, yeah. So
it's crazy, yeah.
So how does a consumer protect themselves in that case? Is there a letter that they can receive before or after?
They won't do that.
They won't do anything. They could get a letter that, okay, yes, you paid, but the
There's no
negative, the
guarantee it's
negative
gonna come off?
mark is going to be there up to 7 to 8 years. No matter if you
Wow.
paid it, the balance is just going to go back to zero, but the negative mark
It's
stays
still
It
there.
won't be
It's
removed.
there.
So does it,
Wow.
when you pay that, does it start the 7-year cycle?
Yes.
So even though, say that you're 5 years and you haven't paid this in 5
Depending.
years.
Depending,
Yeah.
depending the last day they reported the account. Even if you paid it 2 years after,
Yeah.
But it won't remove.
Wow, interesting.
Yes.
That's good stuff,
Mm-hmm.
So what's the biggest mistake that you see that just really tank people's credit?
Debt.
Just
Too much debt.
too much debt, right?
Yes.
Using that credit card and
Applying-
charging it all the way up.
Applying credit cards, going crazy, everywhere, and just maximizing it. That's the number one thing where consumers get to the point where they're using a lot of credit card, and then either they lose their job or they just don't want to pay it, and that's
And
where it's.
That's where they get hammered, huh?
Yes, and
Right. Because they're over that 30% threshold that we talked about earlier.
I've had a client that had 90 accounts, and most of them it was just nothing but debt.
Oh.
Wow, 90 accounts?
Yes, and that's not including, and that's
Jeez.
also including, because the thing is that there is accounts that are, it can be student loans and collections,
Yes.
it can be recovery and collections, and so I have to separate those accounts. Those accounts cannot go together when I'm removing it or challenging these credit barriers. But I go into how I do my audit is I run a loop and I start from the beginning all the way through, so the client can take a look at it in the link, and I'm talking over the video and I'm pinpointing everything they have in the account, including the debt, credit utilization, and depending if the account was late or not, whatever the case is. But of those 90 accounts, maybe there was like 35 credit cards. So it's like the more they apply, the more debt you're accumulating. Or
So like if you were to give advice to somebody, maybe a young person that's starting out their credit journey, is there a set number of maybe credit cards or just trade lines that they should stick
don't
with?
Get more than this many, or
I recommend starting off with the secure credit card.
Mm-hmm.
A secure credit card is the way to go, because since your credit is brand new, you don't want to just go to Sephora, and
Ulta
right.
Beauty.
As long as you're on time paying, that's fine. But if you want to start rebuilding credit to a young person, secure credit card, and it's either a $300 or a $500 where you can put it on your own, and you can it's like you put your money from your own money,
Oh,
pay
okay. Mhm.
gas,
I
a
see
little
what yeah.
groceries or something. It doesn't exceed the $150, and then pay it off at the end of the month, because the credit bureaus want to see how responsible you are.
Yeah, I see that.
And from that point, in 3 months,
Then you can get
they'll
another
bump you
one.
up. Yes.
Do you see like a change with people, like how people are starting to use Afterpay, Affirm?
Yes.
Is that like
It's helpful.
It is
It's helpful because
As long
for
as you pay it.
emergencies, as long as you pay it,
Yeah.
and as long as it's an auto pay. The thing is, I come across from, it's like, I personally have it. It's like, how are you gonna miss a payment when it's auto drafted?
Right.
So
Uh-huh.
those are really great as well.
So those can really help your credit.
It can.
Okay.
It can.
And so those all report, right?
Yes.
So we've noticed that, in the last year, a lot more people are using it, and we see them come up in the trade lines. We have to look at that. And if it's less than 10 months, most of the time we're not going to count it, right? But I'll see some that are 12 to 18 months.
Mm-hmm.
And now, and they'll have sometimes high payments. They'll be like $250 a month because they bought something, for $2,000. And it's like, okay, well, yeah, that affects your debt to income.
So that,
right?
yeah.
And
I don't think people realize that those do affect the debt to income ratio.
Oh yeah.
Mm-hmm.
Yep.
Especially if they're in the process, in contract and about to close, and they think, oh, I'm going to buy this on Afterpay or Klarna and it'll be fine. And then you do that credit refresh and it pops up before closing.
Yes.
So, yeah, big time.
Yeah.
Yeah. And we have to tell people all the time, it's like, if you're buying a home, I don't care. Like, don't buy the boat. Don't go buy a car, Don't go
apply for the furniture or the
yeah, that's a
appliances.
big one,
Yeah.
right? Because they're like, oh, we're closing next week. I got to get furniture and get the movers to
do it.
move in. And then they go and they charge $2-3 grand in furniture. And you're like, oh. And if you were really close on debt to income, you may have just blown that entire deal, right? Because wait till you close, wait till you sign the paperwork, and then go do whatever you want. But do not do anything during the process of buying a home. Keep everything. Talk to your loan officer. Talk to your lender, which is me, and ask before you do anything, period, right? And so that brings up challenges for you as a realtor,
It does,
right?
yes.
Because how do you navigate those that are like, I'm going to do this and I'm going to do that, and they get super excited. I get it, right?
Mhm.
They're excited. Especially if they're buying their first home.
Mm-hmm.
Where do you come in to guide them so they don't make those mistakes?
Well, I mean, you guide them from the very beginning, but I mean, it happened with my own dad that went out and leased a car right before closing. And I was like, what are you doing? Even though his debt to income ratio was fine, it still made me nervous. I was like, why did you do that?
Right.
What? But it doesn't matter how many times you tell them, they still sometimes don't listen.
So as a realtor,
Yes.
I don't have a bone to pick with realtors, but I have a bone to pick with realtors. So, because I get clients all the time, right? They're at 500 and it's just like, I want to force this square peg into this round hole. I know that you can get them approved. I know you can make it work. You just tell them what they need to do and we can get them to the closing table. I really need this sell, From a realtor's mind and perspective, because I'm on the other side, why do you guys go that direction?
I don't. I personally don't. But again, that's because I have lending experience. But what I would say for realtors out there who are very eager and just want to push everybody to the loan officer and not get involved in financials, which they do teach you that. Like as a realtor, you are not supposed to get involved in the financial aspect of it. But you can ask, are you employed? Have you been employed for 2 years? If they have not, that's a sign like, let's find you a rental. Let's wait a little bit. That's a sign right there. If there's a gap of employment that they're like, well, I'm in between jobs, let's wait until you start your new job. But, we can start the buying process. But there's a couple of questions you can ask. You don't have to get deep into what they get paid and stuff like that. But, do you know what your credit score is around?
That's a big one.
And
right?
if they pull up Credit Karma, you just say, that's not it.
That's
Right.
not an accurate.
Well, the one that I get a lot is when I ask realtors and they're like, did you ask them what the credit score was? And they're like, I did, but they said they didn't know.
If they don't know, that's a red flag.
That's a red flag, right? Because you're buying a home. That's kind of an important part of it. And if they tell you, I don't know, then maybe, we're going to have some challenges there.
Yeah.
So,
unless if you're like Gabe and you just get all these cash buyers that like don't even need loans, okay, well then you're good. You don't have to get involved in that part. But if they need a loan, just ask, okay, are you employed? Have you been employed for 2 years? You have? Great. Okay, so you have steady income and great. Do you have a down payment saved up by any chance? Or do we need to go down payment assistance? But because you need down payment assistance, that does not mean you can have zero in your account. You still have to have reserves. They're still going to look at that.
well, and the biggest thing too, right, is like, what do you need to get approved for a home, right? Like Fannie Mae and Freddie Mac on the conventional side just got rid of the minimum credit score, which was 620. So now conventional, if it makes sense, then we can possibly go down below 620. On FHA loans, we can go down to 580 and still keep it at 3.5% down. But there is other options where you can even go down to as low as sometimes a 500 with 10% down. That a lot of people don't know. With people that have credit challenges, it's like, hey, I'm at a 550, I'm at a 560. I've got plenty of money to put down. Can we see if this works? And if the debt to income is low, right, there's a good chance we can get that approved, right? And I don't think a lot of people know that. We can go under 580 if you got some money to put down, right? If you don't, and you're at a 580, and I get this a lot, 580 credit score, I can get approved for an FHA loan. No, because you still got to have low debt to income. Right. And those numbers on a 580 credit score, 28 to 30% needs to be your housing payment. Yeah. So if you're making $10,000 a month, your housing payment can't go over $3,000 a month, right? And then all of your debt combined, that's car payments, student loans, credit cards, monthly credit cards, right? All that, you cannot go over 4,200 of that 10,000. If you fit in that box, then possibly you can get approved at a 580. But if you're much higher than that and you're at 35, and then on your back end where all of your debt's at 50, you're not going to get approved at a 580. We got to get you to a 620 or higher to get you approved.
And a better rate too.
Right. And so when I talk to realtors and I'm giving them that advice, I'm giving them that information, I get a blank look back at me and they're like, oh, I thought 580 was the threshold. It's like, no, it's a threshold, but it comes with requirements, right? Yes. So
let's just say for someone who is looking to buy a house, let's just say they have decent credit, they're good, they're renting an apartment, they've been at their job for 2 years, so we can have that. What do you recommend for them to start doing to get ready? Like, how much do they need to have in savings? whether they use it or not.
Mm-hmm.
But what should they have there?
Typically, you want to have your down payment, and then if you have 3 months reserves, right? If you get 3 months reserves, you're pretty solid. Even sometimes with just 1 month reserves with a decent credit score is fine. But if you're coming to the table and you're spending your last penny on the down payment, then it's high risk, right? Because you're literally living paycheck to paycheck. And as Gabe and I have talked about in previous episodes, not everybody should buy a home, right? And it's like, and that's where it comes to, my job, and one, to make sure I'm putting people that they're not going to fail, but I've also got to protect the market.
Right.
Right.
Nobody wants to be, what do you call it? Cash poor.
Right. You don't want to be house poor.
House poor.
Right.
Yeah.
Where you can't even go out to dinner because you don't know how you're going to make your monthly payment. Right.
And for those that don't know, what are reserves? Like, what is that?
Reserves are going to be how much your monthly payment is on your mortgage. So if your mortgage is $2,500 a month, you need $2,500 a month in reserves. And then if you have any credit cards or if you have a car payment, and say your car payment's $600, then you need $3,100 in reserves. That's going to cover you for that 1 month. You have money in the bank after you close to be able, like if you lost your job today, you could still make your house payment next month, right? That's basically what they're looking for.
That doesn't mean you're going to use it, because there's always a realtor that will negotiate closing costs for you and things like that. But it's still safer to just have it in case.
Right. And then the big one is down payment assistance. I want to get down payment assistance. Well, you're going to need a 620 or higher for down payment assistance. And if you go down payment assistance, well, then that's a higher risk, because now you're telling the underwriter, I don't have the money, so I'm needing somebody to help me get the money to buy this home. Well, the underwriter's going to want to see 3 to 6 months that you have reserves. Again, you're not using that money, right? It just shows that you have money and that you were able to save that amount. So they feel better about the situation and you'll get approved.
And on down payment assistance, your rate is always going to be higher than the market rate. And that's what a lot of people do not realize. No one's really giving you anything for free. Like, they'll give you the money, but in the reality, you're going to pay for it with a little bit of fees and a higher interest rate.
Right. And that's when you look at it, it's like a down payment assistance loan, I want to say they're around 6.75 to 7% right now, where we're able to get borrowers even at a 5.75 on FHA to 6.25, right? So there's a big difference there. So what I tell people is like, hey, use the grant, use the money, and then come back and let's refinance you and get you out of that higher rate and get you into the lower rate. But now you've been able to get around the system and have your down payment and your grant taken care of. 6 months, a year from now, 2 years from now, we refinance you and you're good to go for the next 28 to 29 years. So how much does credit really affect the monthly payment? That's where that 6.75 to that 5.99 could be a difference of $150 a month on a $300,000 house. So coming back to Annette, is it easier to fix somebody's credit at a 550 than it is somebody at a 650?
It's about the same.
Is it? It's the same amount of work?
It's the same amount of work. It just depends, the depth and how many accounts as well.
Yeah. So, somebody with 90 accounts.
Yeah.
That's going to be tough, right?
It's challenging.
Yeah. It's like,
So for those that are looking for credit repair and that are maybe like talking to other people out there, what are some red flags that you can tell them to look out for?
I will go ahead and I'll put your score at the 800s. I'll bump you up 100 points within a month. Upfront money. Yeah, guaranteeing results. I'm guaranteeing, that everything is going to be taken care of within that month, and it's something.
So if someone's saying like, in a month I can have your credit up,
yes,
that's
I can
a
bump.
huge red
Yes,
flag. Okay.
So, and I've heard some of these. I don't know what the cost is of credit repair.
Yes, but
I've heard some horror stories of some of them out there charging like $3, $4, $5 grand.
It's accurate. It's accurate.
What does it typically cost, like for somebody not in that realm, right? Where they're being charged something like that. What's the average real cost? Because I think a lot of people have this misconception that that's what it costs to fix your credit.
Mm-hmm.
Yes, a lot of credit repair companies, they want everything right there and then. If they're quoting you 2, 3, 4,000,
Mm-hmm.
they want that upfront. Me personally, I just ask them, 150, 200 start fee and 120 a month.
Oh,
Nice.
that's not
And-
bad at
Not
all.
bad at all.
No. And I'm very flexible because, once again, companies
Mhm.
and clients are already feeling skeptical.
Yes.
They have that in their mind that they have to pay that. I'm like, no, it's a process. I work through your files. We go. It's 35 to 40 days. Legally, that's something I have to give the FCRA. But here's the thing: clients have gotten to the point where they do put all this money down.
Yeah.
Yeah.
And the credit repair specialist just MIAs them
Yes,
and blocks
I've
them
heard about
and
that.
Wow.
Yes.
So they take their money and then they're bounced, right?
Yes. And then on Facebook, and as of right now, with everything going on in social media, that they put people on blast. Unfortunately, that's like it's really
Mhm.
horrible. And we see like, oh my God, this person, like how,
Mhm.
but that's just how it
Wow.
is. Like, and that's why in the Facebook pages for every credit repair specialist, they call us a scam.
Yeah.
Yeah.
They call us a scam, and I don't blame them because
Right.
I've had clients that come from previous companies, and
So whenever you're doing your Facebook posts or your content, do you get a lot of that in your feed?
not personally, but
Yeah.
like on the Houston page, like I'm
Mhm.
looking for something, and you see all those comments,
Mm-hmm.
But the good thing about me that my private, my Instagram, my Facebook, and my TikTok, they're all open. So
Mhm.
it's like if somebody's wanting to search me up, they're able to, and you have all my content coming
Yes.
up. It's always something.
So do you post some tips on your like your social media, like
Yes.
tips for people that they can
I
do?
post tips. I post education. I post funny, make it entertaining,
Entertaining, mhm.
funny to them. I put results. I post like what I deleted this time, or a medical, a repo, an eviction, a
Nice.
bankruptcy, whatever the case is. I always post so they can kind of get hyped up.
Yeah.
If they
And they
go
can
to
see that you deliver
yes,
results.
and if they go with somebody and their page is nothing but at the nightclub or getting
Right. Yeah, maybe
shit
not. Huh?
wasted,
Mhm.
they're not gonna trust you, especially because we're dealing with so much personal information,
Yes.
and
Mhm.
not everybody's.
So if somebody wanted to find you online, how do they find you?
Credit Annette at Credit Annette. It's on Instagram and TikTok, and then Facebook. It's Anneth Peña. It's my first name and my last name.
Anneth Peña, and that's TH.
Yes,
TH.
ANNETH.
So Credit Annette and then Anneth Peña. Okay.
Yes.
And that'll find you.
Yes.
Okay. So Vanessa, if somebody was looking for a home to buy,
Mhm.
how do they get a hold of you?
They can reach to me at Vanessa Homes and Loans on Instagram and on Facebook and on TikTok as well.
So Vanessa Home and Loans.
Homes and Loans.
Oh, so you do both.
No, but I'm knowledgeable in loans. I used to process your loans, so.
Well, I guess she's got a cheat code because I'm behind the scenes,
And I
right?
have him right there where I can just
Yeah.
ask.
So, but awesome. It's been another episode of Millionaire Moves with Mike Mendiola with Vanessa Mendiola and Anneth Peña. I appreciate you guys coming, and we want to give a shout out to PVB Everglow Permanent Lighting. If you're looking for permanent lighting with jellyfish, call PVB Everglow. You can reach them at pvblights.com. We'll see you guys next time. If you enjoyed any of this content, hit that subscribe button, and we'll see you next time.